Hi, I'm Audrey Taranto, Enstar's General Counsel.
And I'm Nick Giuliano, Enstar Securities and Finance Legal Counsel. And today we're going to talk about what it means to work for a publicly traded company.
Although Enstar is Bermuda-based, its parent company is publicly traded on a U.S. stock exchange. So today we will cover what it means to be a public company and what the benefits are, how public and private companies differ, the role of the U.S. Securities and Exchange Commission and the stock exchanges, what being part of a public company means for you as an employee, and important restrictions on confidentiality and insider trading. So Nick, can you get us started by telling us what it means to be a public company?
A public company is one that has registered an offering of securities to the public so that its shares become publicly traded. This is typically done by going public, which entails listing the company's securities on a stock exchange, such as NASDAQ or the New York Stock Exchange, which we refer to as the NYSE. The shares are then freely tradable based on a quoted market price.
You mentioned going public, so I think it's worth providing some detail on that process.
Typically, companies go public through an IPO, which stands for Initial Public Offering. An IPO is a process through which a private company sells its shares to the public for the first time. So it is an effective mechanism for raising new equity capital that can be used to fund growth. It also provides a liquid market for new and existing shares. To go public, a company is required to file a registration statement and prospectus with the SEC to put in place comprehensive initial disclosure and financial statements. Once the SEC clears the company, the registration statement becomes effective, and all potential investors then have access to accurate and detailed information about a company prior to making a decision to purchase shares. Following effectiveness, investment banks underwrite an offering of the company's shares to the investing public. The banks and the issuing company select a price at which the shares will be offered, and it is this price that determines the amount of capital that the company will raise in the IPO, regardless of whether the shares subsequently trade at a higher price on the exchange. Following the initial capital raise, a company undertakes ongoing public filing obligations to maintain its public company status and the listing of its shares on the exchange. Although the IPO process is the most common, there are other ways companies can go public, such as through a merger transaction, the way Enstar did back in 2007. Audrey, you worked on this transaction, right?
That's right. It doesn't feel like 12 years ago, but indeed Enstar went public not through an IPO, but through a reverse merger or an inversion. Castlewood, the original runoff company, merged with a minority shareholder that was a small public company called the Enstar Group Inc., which was traded on NASDAQ. Castlewood survived the merger, changed its name to Enstar Group Limited, and took over the public listing on NASDAQ.
Now that we've reviewed the going public process and how Enstar came public, we should discuss ongoing compliance and disclosure obligations that public companies like Enstar face.
As a publicly traded company, Enstar must comply with the regulations of the SEC and the stock exchange listing rules of NASDAQ. These include fairly onerous requirements, so in order for companies to be willing to abide by them all, there must be some great benefit.
Right. It's all about access to capital. Businesses need capital for growth, and established publicly traded companies can get access to the capital markets quickly and efficiently compared to their private counterparts, giving them relatively easy access to large amounts of capital from the public markets. Public companies can sell new common shares or issue other instruments such as preferred shares or debt securities, known as bonds. In fact, Enstar has done this several times in recent years. Since 2017, we've taken advantage of this access to the capital markets to raise over $1 billion through the offering of senior notes and preferred shares. And we've used that capital for various corporate purposes, including funding new acquisitions, paying down debt, and taking other actions that support our growth.
Having a public market for Enstar securities also gives Enstar additional flexibility to use its shares as consideration for acquisitions. We did this in 2014 when we acquired Starstone. Enstar's public company status also benefits employees. In many Enstar jurisdictions, employees are eligible to participate in the Employee Share Purchase Plan, which enables us to acquire shares at a discount to fair market value. Part of the value in those shares is that they are publicly traded and liquid.
That's a good summary of the benefits enjoyed by public companies. But there's also a cost to being a publicly traded company, primarily due to increased regulation. First, there's the SEC. This is the primary securities regulator in the United States, and it is responsible for enforcing the federal securities laws and for regulating the securities industry and the U.S. capital markets. The SEC's stated mission is to protect investors, maintain fair, orderly, and efficient capital markets, and facilitate capital formation. It does this by using a disclosure-based regulatory framework that puts the onus onto publicly traded companies to make sure that investors have access to meaningful and accurate investment information.
A disclosure-based regulatory framework essentially means that companies are responsible for publishing material financial and other information about themselves in accordance with the SEC's rules. Companies have to take the utmost care to ensure their disclosures are accurate, timely, and free from material omission. If they don't do this, the SEC can bring enforcement actions, and shareholders can sue for damages resulting from the faulty disclosure. For example, in July 2019, the SEC announced charges against Facebook for making misleading disclosures regarding the risk of potential misuse of Facebook user data in the Cambridge Analytica ordeal. Specifically, Facebook's public filings presented the risk as hypothetical, when Facebook knew that the third-party developer had actually misused user data. Facebook agreed to pay $100 million to settle the charges related to its SEC disclosures. Lawsuits by shareholders in the form of class action lawsuits or derivative suits often follow corporate events such as accounting restatements and can cost companies millions of dollars in settlement and legal fees. The number of these types of lawsuits has skyrocketed in the US in the last 2 years.
By ensuring that everyone has access to quality information about publicly traded companies, the SEC protects investors and the integrity of the US markets. Enstar complies with SEC regulations by publicly filing quarterly and annual financial statements, as well as other event-based disclosures. These filings include Form 10-K, which is our annual report and financial statements, Form 10-Q, which is our quarterly report and interim financial statements, and Form 8-K, which are event-based filings that disclose specific current information, such as important contracts or transactions that we've entered into, and changes to our directors or executive officers. Our SEC filings included extensive information about Enstar's overall financial results and condition, our loss reserves, the risks inherent in our business, and management's view of Enstar's performance, as well as known trends and uncertainties. The filings also address many other items as required by SEC regulation.
Then we have the regulator NASDAQ. Enstar is listed on the NASDAQ Global Select Market, which is the NASDAQ Stock Exchange premier listing. NASDAQ has listing standards, which are the conditions a company must meet to be listed on the exchange. These conditions include financial size and share price requirements, corporate governance requirements, as well as shareholder approval requirements for certain types of transactions and plans. The major stock exchanges in the US are regulated by the SEC, and SEC regulations authorize, and in some cases require, that they create listing standards for companies to follow. I get asked a lot why Enstar is listed on NASDAQ instead of the New York Stock Exchange, or even the London Stock Exchange. The decision for Enstar to take on a US listing with NASDAQ stemmed from the way it went public, by way of reverse merger with a company that was already publicly traded on NASDAQ. Enstar could apply to list on a different exchange, but for the past 12 years, we've had a lot of success with NASDAQ and haven't had a reason to change. People also ask us how the NASDAQ and NYSE differ, or if one is better than the other. What are your thoughts on this?
The NYSE may be more well known, but I wouldn't say one is better than the other. And in fact, the exchanges are fairly similar. Whether listing on one is preferable to the other depends on the company. NASDAQ and NYSE have slightly different listing requirements for companies that want to trade in terms of market capitalization and slightly different corporate governance standards. They also have different fee structures applicable to listed companies. It used to be that NASDAQ was considered more technology focused, but there are a high number of tech companies on both exchanges now. So it really is just a matter of preference for the company that's applying for the listing.
So now that we've covered the costs and benefits of being a public company, let's cover how a public company differs from one that's privately owned.
As a public company, Enstar has to maintain high standards of corporate governance and rigorous internal controls that private companies don't have to. These include having a public registered independent auditor that conducts an annual audit based on heightened PCAOB standards and officer certifications of controls. In addition, public companies have to comply with SEC regulations relating to the solicitation of proxies in order to get shareholder approval for key corporate matters, such as the election of directors, changes to bylaws, appointment of auditors, and transformative merger transactions.
Of course, private companies, especially in the insurance industry, may have certain financial statement and governance requirements imposed by the insurance regulators, but those are related to industry regulation as opposed to securities regulation.
That's right. And public companies must also comply with regulations relating to the fair disclosure of material information. These regulations are commonly referred to as Reg FD.
I think that's worth pausing on. Employees often wonder why they find out about big transactions or other news only at the same time as the press release. It's all related to Reg FD, which is aimed at ensuring that the investing public receives important information about the company on an even playing field to analysts and other market professionals. And this further relates to a topic we'll cover in a moment, which is insider trading.
We've covered what it means to be publicly traded and who regulates public companies. But what would you say are the key things our staff needs to know about working for a publicly traded company?
I'd say that falls into two buckets. The first would be internal controls. So many of our internal controls are designed to ensure that information is gathered and reported by the company and that it's accurate and timely. We all need to take these controls incredibly seriously to ensure Enstar can meet its reporting obligations so that our investors have accurate information to rely on. If you have questions on the internal controls relevant to your job, please ask your manager or your local finance or risk management partner. The second is confidentiality and its impact on specific securities and criminal laws that relate to insider trading. The most important thing staff can do is to maintain the confidentiality of sensitive information about Enstar. In fact, we have policies on that, such as the Code of Conduct and the Insider Trading Policy, which are available on our intranet. Confidentiality isn't just about keeping it confidential from friends, family, and outsiders, although that is tremendously important. It's also about your work dealings with third parties, even highly cooperative partners such as vendors and counterparties. Always use extreme caution in discussing confidential information. In addition to this being good business practice, it also relates to the insider trading laws.
That's right. Insider trading laws criminally punish not only employees who trade in company securities when they have material non-public information, but also those who provide material non-public information to third parties that then trade on that information, or so-called tipping. The SEC takes insider trading very seriously and routinely takes enforcement action against individual violators. For example, in February 2019, the SEC filed insider trading charges against a former senior attorney at Apple. Having received confidential information about Apple's quarterly performance, the attorney traded in Apple securities ahead of 3 quarterly earnings announcements and made approximately $382,000 in profits and losses avoided. The attorney faces criminal and civil charges.
The SEC uses sophisticated software programs that can pick up suspicious trading activity that occurs around the time of events and other announcements. For example, as is common in a public company merger, after Enstar announced our plans to acquire the publicly traded Seabright Holdings in 2012, we were sent a list of names and companies that the regulator's software had picked up trading in Seabright shares around the time of the announcement. Enstar and Seabright were each required to have all staff with knowledge of the transaction review the list of names and identify any familiar names or associated persons. The regulators use the same software to track activity after all kinds of different announcements.
Here are some general rules to keep in mind to make sure you do not violate the insider trading laws. If you ever have questions as to whether information that you are privy to constitutes material non-public information, you should consult with the legal team. If you don't know who to contact, call one of us or email corpsec@enstargroup.com. It is important that all staff are careful not to discuss confidential company business in public, including with family or friends. Information that has already been publicly disclosed may be discussed, but only to the extent of the public disclosure. And our SEC filings are available on Enstar's website. In addition, data protection is vital, and our information security policies must be followed to reduce the risk of potential data breaches that could lead to the disclosure of material non-public information. Any suspected data breach should be dealt with urgently and in accordance with company policies.
Enstar staff may only trade in Enstar securities during open window periods. These periods follow the release of quarterly or annual earnings and close near the end of a quarter. They're notified to staff on iEnstar. Staff includes your family members and associates. If you're in doubt, please ask. Even in an open window, certain Enstar restricted persons, such as officers, directors, and other staff with regular access to group financial results and other sensitive information about Enstar, may only trade with written pre-clearance from the Office of the Corporate Secretary. If you're a restricted person, you receive a quarterly email reminding you of this requirement. Press releases and other public disclosures relating to Enstar's business must be coordinated with group communications to ensure that securities laws are not violated. Only authorized persons within Enstar are permitted to speak publicly about the company. If you're contacted by a press outlet or reporter, it's important that you refer the matter to the group communications team immediately and avoid providing any information unless specifically authorized to do so.
Thank you for that, Audrey, and thank you for your time today listening. To wrap up this webinar, let's review the key takeaways. Enstar invests significant time in meeting our public company requirements to ensure that we can avail ourselves of all the benefits of being a public company. It is both a corporate and an individual responsibility to meet the requirements laid out by the SEC and NASDAQ as a publicly listed company. We count on all of our employees to uphold high standards of internal controls and compliance. The fines and consequences of an infringement of the securities laws can be significant. If you ever have a question, it is always safer to ask rather than go it alone. You can always approach us or your local legal, finance, or risk partner. If you have any questions about anything covered in this webinar, please give us a call.